Hello, and welcome to Global Financial Impact. My name is Adam Shishelsky, and I am one of the executive marketing directors here with this wonderful company. I want to take the time to thank you for joining us today, and today's conversation is going to be one of a kind. So I hope you're in a quiet place with a notebook and pen ready to take some notes, because I promise you today is going to be very enlightening. Now, before we get started, I want to let you know right off the bat that this may not be for you, and that's okay. But I am confident in at least two things. One, you are going to know people that need to hear this information. And two, you're probably going to wish you knew this information a lot sooner. So if any of those come about, please reach out to the person that invited you out and they can better assist you. Now, today's conversation is about financial stability. So on a scale of 1 to 10, I want you to think about that. How important is that to you? Because most people don't realize that there are ways that we are indirectly affected that actually cost us money throughout our lives. And I also want you to think about how long can you go without working before you get financially impacted in a negative way. Now, the 4 ways that people lose money indirectly, and they don't think about it till it's too late usually. One is sickness. Who do you know that had a heart attack, cancer, stroke? They didn't die, but they couldn't work for a long time. What happened with the family? What happened when the bills piled up? No income. The second way, people don't like to talk about it until it's too late again, but death. Who do you know that had a death in the family? And if they were the main breadwinner, what happened to that family when it came to money? 3, furloughed or laid off, especially in recent times with COVID. How many people do you know that couldn't work for a long time? And the 4th way that people lose money indirectly, government retirement plans, 401ks, 403bs. They rely on their savings. They rely on family to help them. So essentially in retirement, people are losing money. But what if you knew ways around all of this so that you are not negatively affected? And this is some of the things that we're going to be discussing today in our conversation. So as we get started, again, welcome to Global Financial Impact, also known as GFI. Our mission is to become the #1 inspirational marketing financial company. That's right. We want to be #1. And our vision is to empower 100 million families to achieve financial independence. We want to help more people become millionaires than any other company and become the largest financial leadership movement in the industry. Now, our core values, this is huge for us, okay? Our company is based off of 5 F's: faith, family, finance, fitness, and fun. But our core values, this is what we look for in people. We're looking for strength of character, respect, transparency, loyalty, people who want growth, people who want to be in the environment of a brotherhood and sisterhood. And our leaders, we are leadership by example. Now, our credibility, this is par none. So we are in partnership with Ethos, a technology platform backed by some of the largest venture capitalist firms in the world, like Sequoia Capital, SoftBank, who are worth over $185 billion combined. Now, for people who might be familiar with this, or for whoever may not be, Sequoia Capital, just to give you an idea, companies like Apple, like YouTube, like DoorDash, it was Sequoia Capital that assists these companies when they go public. And they're going to be assisting us in 2030 when we go public. Now, our founders, there's over 80 years of combined experience, and we are in partnership with over 25 Fortune 500 financial and insurance companies with experience dating all the way back to 1848. Wow. So our industry, we are leading in persistency. We are leading the industry in client retention. And we are licensed in not only all 50 states, but Puerto Rico, Canada, the Virgin Islands, and over 30 other countries as of right now across the globe. So we do have strength in selection. What does that mean? You have options. We have choice. We are non-captive. So unlike someone that might work for Primerica, State Farm, or Allstate, These are good companies, don't get me wrong. But if you don't like what they have to offer, they have to convince you that they are the best. Well, with us, we have access to multiple A-graded companies. So we actually sit down and we work for the client, not for the company. And when we sit down and we do our personal financial reviews, we do this all complimentary. We do not charge our clients 1 cent. Now, how many of you out there have actually heard of the 3 rules of money? And if you haven't, it's okay. Most people haven't. I didn't until I got into the business. But until you understand the 3 rules of money, it's going to be hard to win the money game. Does that sound fair? Because if you don't know the rules to something, how are you going to win it? So the first rule is known as the rule of 72. And another question, who here has ever heard of the rule of 72? And if you haven't, again, it's not a problem. That's why we're here to educate you. So the rule of 72, and the first rule, also known as your accumulation phase, how much you're supposed to get, goes like this. If you take 72 and you divide it into the interest that you're going to earn on the return of your money, that's how long it takes your money to double. Now, Adam, what do you mean? Well, let's look at it. Let's take 72 and put it into 1. What is 72 into 1? 72. That's correct. Picture this as your savings account, okay? Even though we all know we're not earning 1% on our savings accounts. It's like 0.00 of embarrassing, but let's pretend it's 1%. So if you were to put $10,000 into your savings account at 29 years old, 72 years later, at 101, you finally hit $20,000. Now, that's not too exciting, is it? No. And in fact, you're probably more excited that you can still make it to the bathroom in time. But this is fact. Now, let's look at the 4%, because unfortunately, us, the uneducated in financial literacy, we were taught 1 to 4%. 4% picture like your 401ks. That same $10,000 you put in at 29, it's going to double now every 18 years. But at 65, you have $40,000. Are you happy with $40,000? No. And if you have a spouse, your spouse is probably telling you, you need to go back to work. But what if you knew what the rich, the elite, and the wealthy have known? What if you knew how to get returns like banks do? 6%, 12% or more on your money. That's right. Look at 12%. It doubles every 6 years. So that same $10,000 now at retirement age, unfortunately, they're showing 71 because the new age is between 67 and 72 today. But look at the money. You have almost $1.3 million. Now, let me ask you a rhetorical question. Would you rather have 1 to 4%? Or would you rather have 6, 12 or more % on your money? Exactly. Rhetorical question. Now, what if I can also show you to not only have these types of gains, but possibly you could be qualified for guaranteed, tax-free, and bulletproof? Would you want to know more? So let's look at the second rule of money. This is how your money grows, okay? Your money grows 3 ways: fixed, variable, and indexed. Fixed, it's flatline, it's dead. It's money under a mattress, it's CDs, it's your savings account. It does not outpace inflation, and it doesn't grow. And then what happens? We're told to put our money into what? Stocks, 401ks, the variable market. Variable simply means unpredictable, unreliable, and unstable. Now, if I was to offer you a home and say, this home is fantastic, but it's unpredictable, unreliable, and unstable, do you still want that home? Of course not. So why do we want to put our money for our future, for our retirement, for our legacy into the variable market? And I'm going to give you an example of how this works. Everyone says, what's the big lie? Well, the big lie in the industry is wait for the market to come back, you'll get your money back. Well, I'm going to show you how that's wrong. If you have 100, making it really easy, actually, let's pretend $100,000 in your 401k, and the market dropped 50%. What do you have? $50,000, correct. But wait, write it out. The market's back up. It's up 50%. What do you have? If you're saying 100,000, you are wrong. You now have 75,000 because half of 50 is 25. Now, if you continue along with this, you're going to be in the negative. Doesn't make sense, does it? But now look at the third option, index strategies, index funds. This is the protection of a down market with the participation of the growth. Simply put, you never lose money in a down market. So would you rather have flatline dead Would you rather have unpredictable, unreliable, unstable, or would you rather have constant, consistent growth without loss? Now, Adam, how come I haven't heard about this? Well, when's the last time you ever sat with a licensed professional, not just an advisor? Think about it. So the third rule of money goes like this. It's how your money gets taxed. Your money gets taxed 3 different ways. This is also known as your distribution, how you're going to get your money in the long run. So the first way your money gets taxed is tax now. The easiest way to put that, picture a W-2. You work for a company, you get a paycheck, taxes are taken out, you never even saw it. But then you got tax later. These are your government retirement plans. That means you're going to have a tax-free contribution, and then we'll worry about the taxes down the road when you want to retire, when you don't want to work. Now, let me ask you, do you think taxes are going to be lower or higher in the future? If you're saying higher, economists are going to agree with you. Do you realize with your 401ks or your 403bs or your TSPs or your government retirement plans that they're going to take 30, 40, up to 50% of your money when you're ready to retire? And if that company goes out of business, they don't even have to give you the 401k. And don't even get me started on the 14 plus fees that you got to pay with it. But check this out. The wealthy, the elite, what did they know? They knew tax advantage. That's right. This means the money goes in now, get taxed now, because you know that taxes are on sale right now. This allows your money to grow tax-free and deferred. And look at the options here. Executive bonus plans, cash accumulation in an insurance policy. This right here is known as the generational wealth creator. Municipal bonds, Roth IRAs, and all of these here will help. But the best one there, that's that cash accumulation in an insurance policy. You heard of the Rockefellers, right? Keep that in mind. So what do we do? How do we help? Well, we have a full client service menu. This means we can do everything that they can do, but 9 times out of 10, they can't do what we can do. So I want you to pick a few out of here on what you see. What would you like to have help in? Tax advantage wealth accumulation strategies, asset protection, qualified rollovers to get you out of those 401ks, college education funds. If you haven't heard of the $1 Million Baby, definitely reach out to the person that invited you out. Debt management, debt consolidation, infinite banking, family banks, life insurance, living benefits with life insurance now. Everything upgrades. And we specialize in life insurance with living benefits, estate and legacy planning, index growth for your Roth IRAs, your SEPs, your traditional IRAs. You can have business owner strategies and final expense strategies. So take a picture of this, write down the ones that are most important to you, and we're going to sit down and help you figure it out. So do you realize that we are the largest industry when it comes to finances? I mean, we almost double real estate and retail combined. The financial world is the largest when it comes to money being paid, commissions, and how people get helped. The current way of doing things is just not working. Is that safe to say? And think about it. What is the definition of insanity? Doing the same thing over and over and over, and what? Expecting a different result. So are you in the same place you were last year? Are you good with that? Are you going to be in the same place next year or 5 years from now? Are you good with that? Or would you rather change it? Because do you realize the average retirement account only has $182,000 in it? That's for ages 60 to 69 years old. How do you live on that? You can't. How many times have you seen senior citizens working in Walmart or Target or the store and they're greeting you as you come in? Do you think they want to be there? No. They are literally there to supplement income because they can't retire. They weren't educated. They didn't have a plan. Look at this. 40% of divorces are due to financial problems. 60% of Americans are going to get diagnosed with an illness. And that's one of the leading causes of financial stress. But what if you had income protection? What if you knew the money was still coming in? You wouldn't have that stress. You'd be able to get better. Your spouse could be by your side, not have to worry about going to work. This is part of the living benefits. 63% of Americans are living paycheck to paycheck. 67% of Americans have never made a financial plan ever. And 68% of Americans say that they are not on track to retire. Are you on track to retire? Or do you think it's time to sit down and rethink it and come up with a plan? Timing is everything. I'm a firm believer in that. And if you're on this call right now and you're listening to this, you are at the right place at the right time. Think about it. If you were in the room with Mark Zuckerberg when he created Facebook, would you not have been at the right place at the right time? Well, the reason why we bring this up is because right now, the baby boomer generation is the largest transfer of wealth happening right now. 78 million people were born from 1946 to 1964, and they're all going to be retiring by 2030. A person retires every 7 seconds right now as a baby boomer. But why is this important? Well, because everything they touch turned to gold. Now look at the first one here, baby food. Y'all heard of Gerber, right? Gerber was on the way out. They were going bankrupt. And then the baby boomers hit. Then they started bringing in $7 million a month. They've not only flourished and took off and one of the leading companies in the world, but they even offer life insurance now. And then what happens? Those kids grow up. What do you need? You need toys. So Mattel, Hasbro, Barbie, Star Wars, G.I. Joe, that took off. Now you got more kids in the back seat, 3, 4 kids. You got sports activities, too busy to cook. So what happened? Well, Ray Kroc took advantage of this. You know, the guy that partnered with the McDonald's brothers and created McDonald's that we know it today. Fast food industry blew up, took off. Well, now those kids, they're getting older, turning 16, 17 years old. And what does every kid want? They want a car. So Chrysler took off. Ford took off. The car industry blew up. Well, now those kids are done college. They're getting married, having families. Boom, real estate industry took off. If you're a real estate agent in the 80s, you are wealthy today. And then now look at this, like I was saying, retirement. The biggest transfer of wealth is happening right now, and it's over $68 trillion changing hands. Now, who's there to help these people? Who's there to help the people retiring? We are. And what if you had just 1% of $68 trillion within your own business? Think about that. So we use a hybrid business model, okay? And people right now are like, man, this sounds great. You know, I really want an opportunity. Hey, I was the same way, because when it came down to it, when this opportunity was presented to me, I figured, you know what? This might literally be my shot to change the financial curse in my family and bring upon financial wealth and a legacy. So look, here's how we work. We offer financial services, okay? The largest and most highly compensated industry in the world. Again, $109 trillion. We have technology base, the most innovative and efficient technology in the industry, revolutionizing distribution. Do you realize that people can get covered the same exact day now? You don't have to wait months any longer. We use a franchise type modeling system like McDonald's and Starbucks, but better. Because what if I could tell you, hey, I'll sell you McDonald's for $500. Would you buy it? Of course you would. Why? It's not because you want to sell burgers, fries, and shakes. It's because you know that there's a guaranteed system. And if you follow it, you are going to become wealthy, rich, and a millionaire. And then with the McDonald's franchise idea, if you were to own a McDonald's, would you want 100% of one? Or would you rather have 18% of over 100 different McDonald's? Think about that. And then check it out, brokers and agents, similar to real estate and mortgage, except we're going to actually train you to be a broker. And just like the approach in real estate, whatever you're doing right now, if you want an opportunity, if you want to make an extra few $1,000s a month, or if you want to see how high your stars really are, with this, you do not have to quit your job. Continue working where you're at while you're learning what we teach you. So we get paid 6 different ways, because this is on everybody's mind. Well, how do you get paid? How do you make money? And it's a good question. So we have personal income. Every time we sit down, we help a family, we help someone, we get paid. We have agency income. We have expansion income, which is when we expand, we override. We have bonus income. We have recurring income, renewal income, and when we go public, being at the right place at the right time, the opportunity for stock options and equity options. Now, the compensation works like this. They're showing you an example of how one household, you help someone per week save $500 a month. That's it. Because let's face it, most people, families, can save at least $500 a month, right? So by helping them reallocate $500 per month, you will actually be making $5,100 per week, and that's $265,000 a year. It's by helping one person a week. Now, if you double that, you help two people a week at $500 a month, you just cleared over $500,000. Pretty good, right? Now, if you do that times 4, you just made $1 million part-time. And as you go and you build, you can build a team of 6 agents. If they help one person a week, save $500 a month, that's an automatic $14,400 per week for you, $748,000 a year. That's pretty good. And as you move up in the ranks, as you get promoted, your pay increases with each platform that you hit. Eventually, your goal is to get up to the 80% with the 5% bonus. So that same amount that you're doing is going to be 10 times more money in the long run. Now, let me ask you this. Doing what you're doing right now, do you have the opportunity to make any money close to this? And do you have the opportunity to make money more than the owner? Make more money than the owner? Probably not. So what people don't realize is the average cost to open an insurance and financial company is traditionally $100,000 to $250,000. And I'm talking places like State Farm, Allstate, like that. But with GFI, $199. It's all it takes to get you started in your business. And this covers your background check and your state licensing material, because you have to go through a background check and you have to get licensed with your state. So what makes GFI so special? Well, we like to elevate lives and futures. We have ownership opportunity, competitive, personal, and builder's compensation, A+ rated products and providers. We get to travel the world. We have a lot of fun. We make a lot of money, and we change lives and help families. We're a winning culture, proven system. Remember that McDonald's theory. Leadership by example, the fulfillment formula, the 5 F's, faith, family, finance, fitness, and fun. Charitable work and contribution. That's right. If you come into business with us, and if you're a part of a charity, whatever you match, they will match. And you are an agency owner on one of the #1 technology platforms out there. Do you own your time? Do you own your business? Or are you simply building somebody else's dream? Where do you see yourself starting? Come in as a client. Everyone gets the personal financial review complimentary. You can come on as a referral agent. Maybe you're really busy right now. Maybe you own a company and you network and talk to a lot of people. Well, being that we are inspirational marketing, you send them to us. We do all the work. You collect half the commission. Same thing with the revenue share. Part-time basis, you work on this part-time while you're still working your job. You start to build your business with us. And eventually you become full-time and an agency owner. Now, why? Because starting off part-time with us, eventually you're going to make more money than what you're making at your job, and then you can fire your boss. That'd be a good thing, right? Because nobody wants a boss. What's a boss spelled backwards? It's a double SOB. We don't got time for that. So where do you see yourself starting out? Again, everyone gets the client sit down. So reach out to the person that invited you out. And whether you come on as a client, you come on as a partner, or both, we're going to welcome you. So I want to take this time to say thank you so much. God bless, and go for it.